Rotterdam. As scholars, policymakers, practitioners, entrepreneurs, and representatives of international development organizations, you're really joining forces in moving the climate change adaptation agenda forward. I was there when the new Sustainable Development Agenda was adopted by 193 member states during the United Nations General Assembly in September. In New York, the international community committed itself to the goal of protecting our planet and combating the impacts of climate change. Of course, uniting for this issue is really urgent. Our planet is changing quickly, and the effects of climate change are already being felt. Worldwide, 230 million people are affected by the natural disasters caused by climate change. Like farmers in Ethiopia, who are being hit by severe drought and left with absolutely nothing. Residents of the coastal areas of Bangladesh, who must cope with frequent floods, threatening, of course, their homes and livelihoods. Or children in Colombia and Venezuela, facing danger because of exposure to infectious diseases such as Zika virus and other mosquito-driven viruses. The effects are felt here and there across regions and landscapes. Post-crisis and fragile states suffer disproportionately as they have the least capacity to cope and adapt. And in stricken areas, it is always the poorest who are hit the hardest. Access to financial services and financial literacy are increasingly being recognized as an essential part of an adequate response and preparation. Financial inclusion is vital in improving resilience, both for individuals, households, communities, and businesses, especially smallholder farmers and SMEs, which are the backbone of any given economy. Let me give you an example. People without access to financial services often save by investing in livestock or housing. But when a flood or drought hits, these savings are wiped out and they become void of all hope for a better future. Financial services would reduce their vulnerability and enhance their ability to really escape poverty. Saving accounts can help by using funds acquired in better times to cover the harder times. Insurance spreads out the risk more evenly and reduces the financial hardships caused by extreme events. It helps both rebuild assets and handle sudden large expenses such as medical bills. And another thing, payments and remittance services, they actually are in charge of moving funds to where they are used the most. Financial inclusion is particularly important for smallholder farmers. Without access to credit, they could become caught up in activities with declining productivity and income. Often these smallholders need to invest in new machinery, seeds, or irrigation to match changing rainfall patterns. But shifting to new activities almost always involves taking other risks. Producing a new crop, for example, can be a worrisome experience if you cannot afford a year with low yield. And this is where insurance comes in, by helping manage these risks associated with adaptation to the new conditions. The private sector is coming up with innovative tools to support these smallholder farmers. Particularly exciting are weather-based insurance schemes that protect small farming households with weather-related crop losses. A prominent example is Kenya's Kilimo Salama, a microinsurance program, or Safe Farming in Swahili. This program will offer farmers who plant as little as 1 acre insurance policies to shield them from financial losses when drought or excess rainfall are expected to raid their harvests. When weather stations detect a drought, farmers are given a payment straight to their mobile phones. And the results are very clear. Insured farmers are able to invest 20% more in their farms and earn 16% more income than their uninsured neighbours. This is also a wonderful example of a partnership between a foundation, an insurer, and a telecom operator. And really, these kind of partnerships, not only they offer great results, but they should be promoted further. Now, not only smallholder farmers, but also SMEs need affordable financial services tailored to their needs. SMEs are the main source of employment, not only in developing countries, even here in the Netherlands, my own country, but they often face setbacks due to effects of climate change. While most large corporations are able to invest in making their operations more climate resilient, many SMEs do not have enough resources to do so and remain vulnerable as a result. Often, a simple loan or insurance payout could help them to prepare the effects of climate change or to get back on their feet very quickly. But in this, prevention is always better than cure. And enabling SMEs to access financial products and instruments will, in essence, increase their resilience. Globally, today, 2 billion adults are financially excluded. And that's for everybody. But actually, from the poorest, 80% of the poorest do not have access to financial services they actually need. But fortunately, new approaches are showing huge potential in providing shortcuts to financial access. The mobile industry holds a key to achieving the goal of financial inclusion for all households and businesses. Digital financial services, largely in the form of mobile money and card-based payments, are ensuring today that these services reach out further, faster, and cheaper than ever before. A very good example is the French project that was started in the Kerala government in India as part of the Digital India initiative. This enables citizens to pay their bills, fees, and taxes online without having to queue at several offices anymore. Another inspiring example is MCOPA, which brings together digital financial services and clean energy. MCOPA has connected more than 330,000 homes and small businesses in Kenya, Tanzania, and Uganda to solar power. Customers take a loan to buy an off-grid solar panel and pay it off in installments they can really manage. This is where mobile payment services and M-Pesa comes in, handling the financial transactions, which was obviously before not possible. If payments, for example, are missed, the devices can be switched off as a reminder. Using solar power instead of kerosene is not only saving the customers money, but also reducing their CO2 footprint. This is yet another excellent combination of building resilience and responding to the challenges of climate change. Ladies and gentlemen, global and national attention to climate objectives is growing, and we have seen how adaptation emerged as a centerpiece at the Paris Agreement. I'm glad to see the recent commitments made at the Paris Climate Conference last year, including those by banks and institutional investors. Many large banks and companies have pledged to scale up their investments in renewable and clean energy, green bonds, and low-emission transport and agriculture. However, we do need more private sector commitment. The financial sector will have to play a much more important role in contributing to climate change adaptation. The World Bank, you probably know, estimates that developing countries will need at least $70 billion per year until 2050 to meet their current and future climate adaptation needs. Let us not forget that adaptation to climate change is essential for development, and development is essential for creating the new economic opportunities for families, communities, and the private sector itself. But in order to apply the tools of financial inclusion to climate adaptation, we will have to reach across the traditional divides. It will mean smallholder farmers working hand in hand with bankers, suppliers, mobile network operators, civil society, and of course government. The financial sector, be it fintech, banks, cooperatives, or any other, is a vital partner in helping individuals and communities that are vulnerable to the impacts of climate change. So this is really my request to all of you and to everyone who is involved in this very important issue. Let us break down the barriers for those who remain outside the financial system. Let us give all people the tools they need to overcome hardships and improve their lives. Only really when we work together can we ensure that development and equitable growth are sustained despite the effects of climate change. I'm really eager to present the panel. You represent very different disciplines that should be working together, and I hope that you can actually include financial inclusion as one of your tools to enhance adaptation and, above all, increase the resilience of the people in the world. I thank you very much for your attention, and I hope you have a very nice 2 days together.